Hello and good morning. You're watching the Blytheweigh Business News brought to you on Core TV. I'm Charlie Gibson. Now, as we know, one of those dates in a company's diary that is pretty significant is a results date. And one such company that has just announced its results today is Caledonia Mining. They've come out with their third quarter results. And joining me to discuss these is their Chief Financial Officer, Mark Learmonth. Mark, very good morning to you. And also their Head of Corporate Communications, Maurice. Maurice, very good morning to you as well. Thank you very much indeed, gentlemen, for joining us. Perhaps I could ask you first, these third quarter results, just summarise them for us, if you would, in terms of how you see them.
Well, they were sort of fine, I guess. We put out the quarter three production update early in October, and I think we'd made very clear that they were a little bit disappointing. So at that point, we'd revised our guidance down by a few thousand ounces. And so there were no real surprises in the quarter three results in terms of production and revenues and what have you. Costs pretty much still under control. So they were fine for what they are. But I think really the issue with Caledonia is not where we are at the moment, but where we're going, and what's happening in Zimbabwe at the moment, and how that may or may not impact our ability to implement the plans that we've got. So we've always been very clear that 2017, 2018, 2019 are very much sort of intermediate phases as we get towards the implementation of this central shaft, which we're probably going to talk about. And it's kind of fine. But we're still focused on delivering the central shaft, digging the central shaft down to just over a kilometre in depth, and increasing production to 80,000 ounces. That's exactly what we're aiming to do.
You said it's not important where you are so much as where you're going. Yeah. I suppose there are two destinations. There's a short-term destination, and then there's a long-term destination. Yeah. Just in terms of the short term, because you always have fairly precise guidance, I think it would be fair to say, on production, and people are going to make certain assumptions as a result of that. Are you still on track to hit your most recent guidance?
Oh yeah, we are. So we revised the guidance down. It's now in the low sort of 50,000s, and we're very comfortable we'll achieve that. Perversely, having had a difficult first sort of 9 months of the year, and October wasn't that great. Perversely, having revised our guidance, November's turning out to be an absolute corker. As some of the measures that we put in place, particularly to address the grade dilution, are beginning to see the benefit of that. So yeah, we're very comfortable that we will achieve the guidance that we've set out in the short term. And
might you also achieve your previous guidance?
Oh yeah. No, you're quite right. We do for various reasons put out quite tight production and cost guidance and profit guidance, and we do clearly revise that every time we feel that we're going to be either under or over, indeed, or over.
And talk to us a little bit about the flexibility of the operation as it stands at the moment, because in the past we've always had this game, haven't we, of sort of it's development tons or production tons.
Quite right, yeah. And historically we have been constrained on production with some logistical issues underground, which largely we've managed to address. And one of the pleasing things that came out of these Q3 results is that whilst grade was adversely affected by the introduction of long-hole stoping and some low-grade areas, which is a separate question, I can come back to that later, we have managed to increase tons quite significantly. So we're beginning to get through those logistical issues, largely through the use of these declines, which we introduced a couple of years ago. So that's decline developments to get into areas below 750 metres, and they're working surprisingly well actually. We're very pleased about that. And one of the things we're doing now is we're slightly reformatting the way that we're proposing to do the central shaft to introduce a further decline several years out, because they're working so well for us. So that flexibility is beginning to improve.
You say the declines are working well for you. I think it's fair to say that conventional wisdom is that vertical shafts are more efficient than declines. So are you doing something different?
Yeah, the problem with conventional shafts is that you might be right, but it takes an awful long time to dig them. And the fact is that given the fact that this mine's over 100 years old, the resource base above 750 metres is now very depleted. We're kind of running out of time. We have to get this. We have to get this shaft down. If we can't get the shaft down quickly enough, we will have to use declines. to open up deeper areas. So we can't change the one of the issues that we're facing in the sinking the central shaft is the delays that we're encountering because of the incoming electricity supply, which is very unstable. Which means that in the course of a night shift, we might have 6 or 7 interruptions to power. Each one of those, well, even if the interruption is only a couple of minutes, each one of those results in losing 10, 15, 25 minutes as we sort of reset all the equipment and start again. So because the central shaft is suffering those delays, frankly, and given the fact that we're very comfortable now operating declines, we've taken the decision to sink the shaft to about 1250 metres instead of 1330, and only take it down to 3 new levels, not 4 new levels, and do the 4th level in due course by way of a decline, which we're very comfortable doing.
You hinted the fact that you're up against some sort of time constraints there. You said you wanted to get the shaft down as quickly as possible. Where do you need to get it to by when?
The critical thing that we have to do is we have to be in a position to access 34 level. About 870 metres below surface. We have to be in a position to do that, because if we fail to do that, then we will be very, very badly constrained with the availability of ore shallower in the mine. And so that's one of the reasons why we've taken this decision to only go down 3 levels, not 4 levels, so we can be sure that we've got that access in time.
So where are you now in terms of the shaft?
We're currently down to 12, I think 1148. 1148. So we've actually got very little vertical sinking to go. What's taking the time now is doing the horizontal work. That's what's taking the time at the moment. But given the sort of revised format for the central shaft, we're very comfortable that we will be on track to basically what it comes down to is to deliver 80,000 ounces of gold from 2021 onwards. That's what we said we're going to do, and that's what we're still on target to do.
And that compares with sort of mid-50s
for
this year?
50 to 60, low 50s this year, perhaps sort of mid-50s next year, that sort of area. But instead of having a 5 in front of it, you should hopefully have an 8 in front of it.
So it's roughly a 40% uplift from where you are in terms of
It is,
ounces.
but don't forget that the cost base is very fixed, very high fixed cost base at the mine, and a completely fixed cost base above the mine. And so incremental production gives rise to a very significant increase in cash generation and profitability. So there's an extra 5,000 ounces doesn't just increasing your production by 10% doesn't just increase your profit by 10%. It's got a much more powerful effect than that.
It would be remiss if I didn't ask you about operating in Zimbabwe. You've hinted at it there in a number of ways, but you're talking about the interruptions to power, and it's not only the power outages that matter, is it? It's also the fluctuations in voltage, which
we have a guaranteed supply arrangement with ZESA, that's the state electricity company, and they honour that. We only get interruptions because of someone's crashed into the pole and the line's fallen over, so we don't get load shedding. But because the incoming voltage is just so unstable, because their equipment is so antiquated, it gives rise to it damages our equipment, and so things just trip automatically. There's nothing we could. The only real way we could address that would be to go completely off grid and install a solar project, which we have investigated, and it does make sense. We would just need to see a significant improvement in the investment climate in Zimbabwe to be able to commit to embarking on a project of that size.
Speaking of which, there have been a couple of stories in the English press recently about shelves being empty in supermarkets again, about, is it right to say, the creeping reintroduction of the Zimbabwean currency?
Yeah, Maurice, you're much hotter on economics than I am.
Yeah, the problem Zimbabwe faces is since they dollarised the economy, they don't have their own currency anymore, and they depend on US dollars as their functioning currency. And with a trade deficit, they tend to be short of dollars, and that creates some stresses in the banking system. And we are seeing a bifurcation between the banking system and US dollar currency on the foreign exchange markets. That's creating some difficulties for local payments. There have been reported cases of gold mines in Zimbabwe having production difficulties. One of them closed down. They've subsequently reopened recently, so it is a problem that's receiving very high levels of attention in the Zimbabwean government and with the monetary authorities, and it does seem, as a generator of foreign exchange, the gold mining industry is critical to that. Caledonia is an important part of that. So So it's certainly not a question of political will to fix the problem, but the economic realities are a little difficult. Zimbabwe faces some tough choices. In fact, the president himself wrote an article in the Financial Times just yesterday, which I'd encourage any investor to read if they're interested in hearing directly from the politicians their attitude to the problem, where they highlight the choices ahead for Zimbabwe. I think there's a far brighter future for the country, but some difficult short-term decisions that I think need to be made, and we feel confident that that's receiving the right levels of attention, and we continue to be an important foreign exchange generator for the country and hopefully part of the solution.
Just tell us, if you would, what do you think those difficult short-term choices are, and how might they impact Caledonia?
I think there's either the question they face is how to address the shortage of dollars. That would require either a relatively large bridging loan from international financial institutions. I'm not privy to those conversations, but Zimbabwe would be required some debt forgiveness and reintroduction to the international monetary markets. That would be one solution. I'm not an economist, Charlie. We're engineers from the mining industry.
You're doing very well. So
that would certainly be part of the solution. Whether or not they would reintroduce their own currency or stay with the dollar, both of those solutions would come at a cost. The one cost if they stayed with the dollar would be much higher interest rates, and if they reintroduced their own currency, there would be a devaluation risk. Both of those we feel we could weather as a business quite comfortably because we mine gold. So we're more fortunate than perhaps other businesses operating in country. So I can't speak intelligently to what I think the solution will be, but I think it's fair to say that whatever the final outcome that is decided upon, it's likely to be better in future, but likely to have some difficulty in the short term.
just finally, because we're running out of time a bit here, but more broadly on the political situation, is the new president now firmly installed? Does he have the support of Parliament? Does he have the support of the country? Has Mr. Mugabe quietly retired to spend more time with his family?
I don't know I don't actually know the real answer to that. To the extent that,
and
to the extent to which family Mugabe is behind the scenes pulling strings, I don't know. We hear sort of rumblings and rumours and suspicions about that from time to time. But as far as we're concerned, from what we see, our engagement with government is that it is now very commercial, very pragmatic, and the doors are open for sensible discussions in a way that they weren't, say, 18 months ago. And we think that's a very, very welcome change. And it's one that we're trying to take advantage of.
So it's a definite improvement compared to the Ancien regime.
Absolutely, no question about that at all.
Excellent. We wish you the very best of luck. Thank you very much indeed. Ladies and gentlemen, that was Mark Learmonth, the Chief Financial Officer of Caledonia Mining, joined by Maurice Mason, the Head of Corporate Development. I'm afraid that's all we've got time for from me, Charlie Gibson, on the Blytheweigh Business News, brought to you by Core TV. We'll be back very, very soon indeed with more such mining opportunities. And until then, you have a very capital day.